Hey everyone, over the last 5 years, gold prices have almost doubled from around 39,000 rupee all the way to 78,000 rupee. And I was going through some articles where Bank of America mentioned that gold prices can touch levels of around $3,000 per ounce by 2025 against the current price of around $2,600. That's another potential 15% growth. The key reason is geopolitical tension that has created a volatile environment. And central governments are consistently adding gold in their reserves that has created consistent demand for gold. Now in Indian society, gold holds a significant importance. On one side, gold is deeply rooted in Indian culture where purchase of gold is considered auspicious. On the other side, gold is considered one of the safest investment options that can be of help during uncertain times. Gold is also an internationally accepted asset class and has historically generated inflation-beating results. So that really helps in diversification. Not only that, gold is considered a status symbol in India where purchase of gold is directly linked to prosperity. In short, gold is not just an investment option in India, it carries sentimental value where it is often passed on from generation to generation and even gifted during important life events. But with changing times, the option to invest in gold are also evolving from physical to digital model. Physical gold has multiple challenges like storage and safety issues where you always have the risk of theft or loss, whereas digital gold is stored in digital format that eliminate the need for storage and theft. The next issue with physical gold is higher making charges where digital gold does not have any making charges. Third challenge is convenience, where physical gold has to be purchased at jewelry shop, whereas digital gold can be purchased with a few clicks. Likewise, digital gold can be sold anytime with few clicks. Another advantage of digital gold is that you can invest a very small amount in digital gold, making it more accessible for those who may not afford physical gold. Clearly, digital gold offers a modern, convenient and more cost-effective way to invest in this precious metal, which is more suitable for someone who is looking for flexibility and ease in their investment choices. Now within digital gold, one of the simple and smart way of investment is via gold ETF. And recently Groww Mutual Fund has introduced gold ETF called Groww Gold ETF. This NFO is available till 18th October with a minimum investment of rupees 500 and there is no exit load. So Groww Gold ETF is an open-ended exchange-traded fund, that is ETF, that seeks to replicate the domestic price of physical gold. Now there are multiple benefits of investing in Groww Gold ETF. First is the returns are aligned with gold performance. So gold ETFs are designed to track the price of gold by holding physical gold bullion or gold-related asset. Hence the NAV of gold ETF is calculated based on the current price of the gold it holds divided by number of shares outstanding. This ensures that the ETF's price are aligned with the underlying gold price. As the price of gold increases or decreases, the value of ETF shares generally move in tandem with gold price. But since gold ETF are traded like a stock, the supply and demand for the ETF can influence its price. Although generally, any divergence from the gold price is usually corrected quickly as arbitrageurs buy and sell the ETF shares accordingly. Apart from this, there can be some tracking error in gold ETF that can result in slight difference in the performance of gold ETF and performance of gold price it tracks. This tracking error is mainly caused by management fee, liquidity issue or portfolio rebalancing. Although this tracking error is generally very low and does not significantly impact the ETF's performance in relation to gold price movement. Then second benefit is gold ETFs are regulated and transparent. So gold ETFs in India are regulated by SEBI that has established rules and guidelines to protect investors and ensure fair trading practices. For instance, gold ETFs must disclose their holding, net asset value and performance metrics regularly. This information is made available to all the investors, helping us make informed decision. Then gold ETFs are required to have their gold holdings audited by independent auditors. The physical gold is typically stored with reputed custodian, which ensures its safety and authenticity. And since prices for gold ETF are based on real-time market rates, it provides transparency. Then third benefit is gold acts as a hedge. Now historically, gold has been considered as a hedge against systemic risk, including your financial crisis and inflation. It's because during periods of geopolitical tension such as your war, trade dispute or political instability, gold is viewed as a safe haven asset. So during uncertain times, investors tend to buy gold to protect their wealth, and this resulted in an increase in gold prices. For example, during 2008 global financial crisis, gold gave a positive return of 5.8% while major stock indices like S&P 500 and Nifty 50 were down badly. Likewise, during COVID-19 pandemic, gold gave a return of 25.1% in 2020. So whenever there are uncertainties in the global economy, gold has outperformed. That makes it a great hedging instrument against systemic risk, and one of the reasons why gold should be a part of your portfolio. Then fourth benefit is convenience. Gold ETF can be purchased online via various platforms and apps, allowing you to buy gold anytime, anywhere without the need for physical visit to a jeweler or dealer. Gold ETF also allow fractional ownership, where each unit of ETF represents just 0.01 gram of gold. This fractional ownership makes it accessible to a wider range of investors regardless of your budget. Plus, gold ETFs also eliminate the need for physical storage. They are stored securely by the platform with reputed custodian. Then fifth benefit is gold acts as a hedge against currency depreciation. Since gold prices are determined in the international market in dollar, if Indian currency depreciate against the dollar, it directly results in an increase in gold prices. For instance, between 2014 to 24, gold has given 106.76% return in USD terms, while the INR, which is Indian currency, is depreciated from 61.5 to 83.8 against the dollar. This growth corresponds to 181.6% return in INR terms. So gold is not only a hedge against systemic risk, it is also a hedge against currency depreciation and inflation. Then sixth benefit is gold ETF can also be used as collateral for loan. Since gold ETF provide the stability and value of gold with liquidity and convenience, you can use it as collateral for loans. Gold lenders use the current market price of gold to calculate how much they can lend. Typically, they offer a loan worth 70 to 80% of the gold value. For instance, if you have invested around 10 lakh rupee in gold, you can get a loan worth 7 to 8 lakh, keeping gold ETF as collateral. Considering all these factors, Groww Gold ETF can be a good investment option if you want exposure in gold. Since gold has been a great hedging instrument, it should be a part of overall asset allocation where around 5 to 10% of the money can be kept in gold. Now tell me in the comment what percentage of your allocation is in gold. I'll see you next video. Till then, take care.